Welcome to the deep dive. Today we're jumping right into something huge. A massive change happening in, well, global finance.
Yeah, it really is huge.
For, generations, money's moved in pretty established ways, but now we're seeing these new technologies pop up that could totally overhaul everything.
Absolutely.
And if you're listening, you probably want to get a quick, solid understanding of this shift. So that's what we're going to try and unpack today.
It's definitely more than just tweaking the current system. It's like building entirely new infrastructure. You can think of the old way as, I don't know, a network of old country roads, maybe, sometimes slow, definitely congested.
Right.
What's being built now are these new rails and highways, a whole new global system, potentially quantum secure eventually, for a totally different financial world.
Rails and highways, I like that. And the really mind-blowing part, I think, is the power this new setup could put right into your hands. Literally your smartphone.
Exactly.
Using your phone for like decentralized finance, DeFi being your own bank, basically.
Yeah.
It still sounds a bit sci-fi, but it's happening fast.
It is. And, if we step back and ask why this is happening, a big part is just the problems with the system we have now.
Okay, like what?
Well, take sending money across borders. It sounds simple, but behind the scenes, it often involves this complicated chain of banks talking to other banks. Correspondent banking, they call it.
Correspondent banking. Okay, sounds a bit clunky already. What does that actually mean for someone sending, say, $100 overseas?
It means your bank probably doesn't have a direct line to the bank where the money needs to end up, so it has to hop between these intermediary banks, the correspondents.
Okay, like connecting flights for your money.
Kind of, yeah. And each hop can add delays, costs, and honestly, sometimes you lose track of where the money even is in the process. It's not very transparent.
Right. I've seen reports, Accenture and others mention this stuff. The delays can be days, the fees can really bite, and it's often a black box. You just hope it gets there.
Precisely. So the alternative people are building involves distributed ledger technology, DLT.
DLT.
The idea, and again, Accenture points this out, is that DLT could offer a system that's more robust, way more efficient, and cheaper. Because you don't necessarily need all those middlemen.
How does that work? Is it like a shared spreadsheet everyone can see?
That's a simple way to think about it, yeah. A shared digital record book that isn't controlled by just one company, which makes it inherently more open and secure in many ways.
Okay, so DLT is like the basic road material. But if everyone builds their own separate DLT road, how do we connect them into those global rails and highways? Seems like we still have disconnected systems.
You've hit the nail on the head. That's the crucial bit. Interoperability, getting these different ledgers to talk to each other smoothly.
Right.
Quant's white paper really digs into this. How do you make completely separate systems, different types of blockchains, work together?
And Quant Overledger is their answer. What does it do?
Think of it like a universal adapter or operating system for blockchains. It aims to connect different DLTs without forcing them all onto one chain or building point-to-point bridges for every single pair. It sits above them.
Above them, how?
Well, technically, they separate the layer where the actual money moves the transaction layer from a common messaging layer. This messaging part uses a standard language, a protocol, that different blockchains can understand via Overledger.
Interesting. So it's like having Windows, Mac, and Linux all able to understand the same basic network commands.
That's a pretty good analogy, yeah.
So does this mean an app built using Overledger could, work across Bitcoin and Ethereum and maybe some private bank chain all at once?
That's the idea. And the Quant paper emphasizes doing this while keeping things private where needed. Plus, these blockchains themselves get updated all the time.
Oh yeah, that must be a nightmare for connections.
It could be. But Overledger is designed to handle those changes, so an update to one blockchain doesn't necessarily break the whole network.
That seems essential for a global system. Okay, you mentioned privacy. How does the messaging layer help with that? Are the messages themselves on the blockchain?
Not necessarily the full details. Often it's more like cryptographic fingerprints or hashes of the messages that get recorded on the blockchain.
Fingerprints.
Yeah. It proves a message was sent and wasn't tampered with, but it doesn't reveal the actual content to everyone. Think of it like a certified mail receipt. Something was delivered, but not what was inside the envelope.
Gotcha. And they mentioned multi-part message hash pointers. Sounds complex.
It just means you can have even finer control. Like maybe part of the message is public, but other parts are encrypted and only visible to specific people involved in the transaction. Layered privacy.
Okay, layered privacy makes sense for business. So interoperability is key infrastructure. But how do we make sure that a transaction across two different ledgers actually works properly? Like it either happens on both or not at all. That sounds critical.
Absolutely critical. That's called atomicity, atomic cross-ledger transactions.
Atomicity, all or nothing.
Exactly. You don't want your euros to leave your account if the dollars don't arrive on the other side. That would be chaos.
Yeah, no kidding. So how do they achieve that without a central referee?
Well,
Accenture talks about hashed, time-locked contracts, HTLCs. What are those?
okay, think of an HTLC as a smart contract, like a digital safe box with rules. It locks up the money, right?
Uh-huh.
And it will only open and release the money if the recipient provides a secret password, basically. But, and this is key, there's also a time limit.
A timer.
Yep. If the recipient doesn't provide the secret before the timer runs out, the money automatically goes back to the sender.
Ah, okay. So it's like digital escrow with a deadline and a secret code. No trust needed, just code.
Exactly.
Right.
Project Jasper Ubin, mentioned by Accenture, actually proved this works. They did real cross-border, cross-currency, cross-platform atomic swaps using HTLCs.
Wow, so it's not just theory.
No, it's been demonstrated. And Quant's paper also describes their approach using things like ready messages and hash pointers to make sure everyone's lined up before the value actually moves. Again, guaranteeing that atomicity.
Okay, so we have interoperability, atomic swaps. What about the money itself? We hear a lot about central bank digital currencies, CBDCs. How do they fit into these new rails and highways?
CBDCs could be a massive piece of this. They're basically a digital version of a country's official currency issued by the central bank.
So like a digital dollar or digital euro.
Exactly. And projects like Enbridge are exploring how multiple CBDCs from different countries could work together on a single platform.
Enbridge, multiple central banks on one platform.
Yeah, involving central banks from China, Hong Kong, Thailand, the UAE, and the Bank for International Settlements. They ran a pilot settling real transactions using the CBDCs of these participating banks.
Real money. Wow. What are the benefits they're seeing?
The potential is for a much faster settlement, fewer intermediaries, more transparency, and lower costs compared to the old correspondent banking system. It uses a dedicated blockchain with smart contracts to handle these cross-border flows.
Makes sense. But what about privacy? With different central banks involved, that must be a huge concern.
Definitely. The Enbridge platform uses things like pseudo-anonymous addresses, so you can transact without revealing your identity to everyone, but the central banks can still have the oversight they need for regulations.
Okay. And we've also seen things like Project Helvetia in Switzerland looking at wholesale CBDCs, right? WCBDCs. How does that differ?
Right. Helvetia looked at settling transactions between financial institutions using a wholesale CBDC. They explored two main ways, actually issuing the WCBDC on a DLT platform,
Okay.
or building a link between a DLT platform and the existing payment system, the RTGS system.
What's the trade-off there?
Well, issuing the CBDC directly on DLT opens up more possibilities for new features, like programmable money or complex atomic settlements, but it's also a bigger policy step for a central bank.
Right. More complicated to set up.
Linking to the existing system is maybe easier policy-wise, more familiar, but you might not get all the potential benefits of the DLT.
Interesting. And where do platforms like Stellar come in? Are they being looked at for issuing CBDCs too?
Yeah, Stellar highlights its network features security, speed, transaction finality, compliance tools as being suitable for CBDC issuance. Central banks could even run their own validator nodes on the Stellar network to maintain control and trust.
So lots of different approaches being tested for the money part. Now back to connecting everything. Axelar network comes up too. How are they different from, say, Quant?
Axelar is also focused squarely on interoperability, connecting different blockchains. They're building a decentralized network with its own protocols and tools, aiming for sort of frictionless communication, any chain talking to any other chain.
Frictionless. Sounds good.
They aim to connect not just individual blockchains, but also other interoperability hubs using a standard protocol. They use delegated proof of stake for consensus and some advanced crypto like threshold signatures to keep it secure and decentralized.
Okay, another piece of the connection puzzle. Now, what about the underlying engine? The speed and scale needed for a global system. Hedera hash graph is often mentioned. How does that fit?
Hedera offers a different take on DLT altogether. Not technically a blockchain, but a hash graph.
Hash graph.
Yeah, it uses a different consensus mechanism. The hash graph algorithm, which they claim is extremely fast, fair in ordering transactions, secure, and very stable. It's designed for high-throughput applications.
Faster than blockchain. How?
Instead of blocks in a chain, it uses a different structure, a directed acyclic graph, or DAG, to record and order transactions more efficiently. They also really emphasize governance, with a council of major organizations overseeing it, and they use patents defensively to prevent the network from splitting or forking.
Stability is key, for
Sure.
sure. You don't want the financial system splitting into competing versions.
Absolutely not. And Hedera also supports users holding their own keys self-custody, and they're focused on being compliant with regulations. Your consensus service is also interesting. It just provides trusted ordering and timestamps for events from other applications.
Okay, so another powerful potential layer for this infrastructure. But looking further out,
Yeah.
what about quantum computers? We hear they could break current encryption. Is this new system being built with that threat in mind?
That's a really critical question, and yes, it's definitely on the radar.
Good.
Quantum computing does pose a potential threat to the cryptography we use today. So projects like LEAP are already exploring how to implement post-quantum cryptography, new algorithms resistant to quantum attacks within central bank systems.
Post-quantum crypto, so it's already being worked on.
Yes. The transition will likely involve a period of using hybrid systems, both old and new crypto together, just to be safe.
Yeah.
But the goal is to quantum-proof the entire stack. The network, the apps, the data transmission.
Phew. Okay, good to know they're thinking ahead. So let's bring this all together. We've mapped out these amazing new rails and highways, interoperability with things like Quant and Axelar, atomic swaps using HTLCs, CBDCs potentially transforming payments via projects like mBridge, robust ledgers like Hedera, and even getting ready for quantum computers. Now, the really exciting payoff for the listener. How does all this tech actually let you or me become our own bank using just a smartphone?
This is where it all converges, right? Because this underlying infrastructure allows digital value, whether it's a CBDC, a stablecoin, or another crypto asset, to move smoothly and securely.
Wow.
This opens the door for individuals like you to directly access decentralized finance or DeFi.
DeFi. So instead of going to my bank for a loan or to get interest.
You could potentially open a digital wallet on your phone, connect directly to a DeFi lending protocol, and borrow or lend your digital assets. Or you could stake your assets in certain protocols to help secure the network and potentially earn yield that way.
Earn yield, like interest, but maybe better returns sometimes?
Potentially, yes. Though also with different risks, of course. But the key difference is cutting out the traditional middleman, the bank.
And that concept of self-custody, like Hedera mentioned, that's huge, isn't it?
It's fundamental to this idea. You hold your own keys. You control your assets directly in your digital wallet. You're not just a name on a bank's ledger. You are the bank for your own funds.
Wow. That really shifts the power dynamic.
It does. And it could bring financial services to people who are currently unbanked or underbanked, as long as they have a smartphone and internet access. That's potentially billions of people.
So just to wrap it up, we're seeing this profound shift. The old financial plumbing is being replaced by this new global quantum financial system infrastructure built on interoperability, secure atomic transfers, CBDCs, and quantum-resistant tech. These are the rails and highways. And the truly incredible outcome is that this infrastructure could empower every single one of us, you listening right now, to basically become your own bank. Managing finance, generating yield through DeFi, all from your phone. It's a revolution in the making.
It really is. And it leaves us with a big question to think about, doesn't it? As this fundamental infrastructure changes, how is it going to reshape our relationship with money, with banks? What completely new opportunities and, yeah, probably new challenges, too, are going to pop up for us as individuals and for the whole global economy?
Really powerful questions. Definitely food for thought. We hope this deep dive gave you a clearer picture, and we really encourage you to check out some of those white papers we mentioned if you want to go even deeper. Thanks for joining us today.